What's going on, guys? My name's Kyle. Welcome to the Big Money Mindset 2 Rocket Fuel channel. In today's video, we're going to be covering a stock that analysts say is undervalued right now as we speak, and they expect a ton of upside after the merger completes for this Spac stock, and that is HCAC CANOO, which is going to be merging in the next week. We'll take a look at the articles to see what these analysts are saying, and we'll also take a look at the charts. Once again, I want to say congratulations to everyone that signed up for the Patreon. The link is in the description. Patience is starting to pay off. We're up on multiple companies. Every single call option I'm playing right now, they've all been listed in the Patreon, and I'm up on all of them. Some of them I'm up massive. That's NEO right now. IPOB is starting to roll around, and HCAC we're talking about today is also up as well. So take a look at the link and just read up on the summary. And only if you feel this video gives you a better insight on HCAC CANOO, be sure to subscribe to the channel. I'm going to be keeping you updated daily on all the growth stocks and spec plays. There's going to be a lot of great information coming out, and you don't want to miss it. Let's get into the video. This is an article that came out yesterday on Investor Place. When its merger with EV maker CANOO closes, HCAC stock will fly. HCAC stock is worth 60% more when it merges. Mark R. Hack, CFA, is a financial analyst and entrepreneur. He has been a chartered financial analyst, CFA, for 27 years and owned his own investment management team. So this guy is highly qualified. He's very good, and he's been doing this for almost 3 decades. So we'll just take a look at this article just to see what he's saying the potential upside for CANOO is. The valuation forecast is based on my analysis of the company and its own valuation from the company slide presentation. The deal recently announced on August 18th envisions a reverse merger with CANOO. The company projects 2024 revenue of $1.43 billion and 2025 revenue of $2.3 billion. And its first profit at $188 million. CANOO expects to build 10,000 CANOO vehicles in 2022, rising to 60,000 in 2024 and 95,000 into 2025. So I know what you guys are thinking. Revenue is far out. 2024. We are entering 2021, but I have reviewed the investor presentation, and as we can see here, they are expected to do over $120 million just next year, which we're about to be entering January very soon. So this company will be making money next year. Of course, it's not the big, billion-dollar game plan they have in 2024. But as you can see right here, we do expect over $100 million in revenue from their engineering services that they offer. They also offer B2C vehicles right here, going to be released in 2022. And this is the big one right here, the last mile delivery vehicle in 2023. So they have different revenue streams, as we can see right here. But even more interesting, CANOO will not sell its vehicles. It only offers a subscription model. This is a lease of the EV, but with no definitive lease term and no down payment, both of which are traditionally in car leases. Moreover, subscription owners of CANOO vehicles do not have to pay DMV costs, maintenance costs, or issues with residual value. CANOO says that this business model will be much more profitable than a one-time sale of the vehicle with much higher margins. It believes that it will make 4 times the margin of a normal one-time sale manufacturers. This is why CANOO's business model is different. CANOO believes this lowers the barriers to entry. It is the simplest way to have a single all to yourself for as long as you want, minimal 1 month, 1 monthly payment, no commitment. This could clearly transform the way people think about electrical vehicles. Tesla said in its Battery Day event in September that it would have a $25,000 car in 3 years. That may or may not happen. But CANOO plans on being able to deliver its first consumer subscription-based EV model named the CANOO by 2022. Shortly after that, it will deliver a last mile delivery vehicle and a sport vehicle. And guys, that vehicle, the last mile delivery vehicle, has just been announced this week. And I've never seen so many headlines on a topic, guys. This has been going viral the past 2 days. This last mile delivery vehicle is valued very cheaply at $33,000, and it is trending worldwide right now leading up to this merger. What HCAC stock and CANOO stock is worth, the slide presentation indicates 244.8 million shares will be outstanding by the close of the merger, on which shareholders will vote on December 21st. Therefore, at nearly $20 for HCAC stock, which it is still right now, right around $19 closing of this Friday, the pro forma market capitalization of the combined company is $4.74 billion. This is on page 52 of the slide presentation. Moreover, as the company will receive $607 million in the merger, the pro forma enterprise value is $4.13 billion. Therefore, we can say its value using an enterprise to sales model and compare this to what the company says its peers and sum of the parts value should be. CANOO's 2025 revenue is forecast to be $2.341 billion, but we need to discount the revenue to the present. For example, at 15% discount rate over 5 years, the present value is about half of the 2025 revenue, 49.7%. This present value of $2.341 billion today is $1.164 billion. As a result, HCAC stock has a pro forma EV to sales multiple of 3.5 times, 4.13 billion divided by 1.164 billion. This is way too cheap. Its enterprise value should at least 5 to 6 times sales to be comparable to other EV makers. Moreover, the company itself on page 52 of the slide presentation that its sum of the parts valuation should be at least 6.582 billion. This is based on comparisons with the Tesla and Netflix, a subscription-based business model. Now $6.592 billion is 60% higher than HCAC Spac enterprise value of $4.13 billion. Therefore, HCAC CANOO stock is worth at least 60% more than today. Guys, that's what the pros do when they break it down number-wise. If you guys want fair market value, that's what they're saying this company's worth. We're going to take a look at the charts right now. We're going to take a look at my options, and I'm going to show you guys, they're saying that this has a ton of upside, coming this week leading up to this merger. Right here, we can see the HCAC stock. It's $19.40. We'll take a look at the 3-month chart, and I'm going to break down a couple things for you guys that I've been looking at. So we can see right here, all of November, the stock was pretty much flatline, no news, no information. I told people to start buying right around here, guys. This is when I told people, let's get in some options, and this is when we entered the options. Right here is when Jim Cramer, decided to take this company upon his show and, hype it up and say, he really liked the company, which is fine. And right here, we can see after Jim Cramer announced this on his show, and just know, guys, I was in on this before Jim Cramer started pumping it. We rose to $18, bounced all the way up a couple days later, hit a $22 high, and then we saw Jim Cramer, tell everyone to pump the brakes. This is overvalued. This is growing way too fast. So Jim Cramer was just trying to cover his butt in case of a pullback. He wanted to make the announcement that the company right now should have a pullback. So we had the pullback all the way back down to about $17, as we can see right here. And since then, it looks like investors are starting to take a look upon this company as a great long-term investment, as well as, in the short term, just a little bit undervalued right now. And we bounced from $17, finishing out the day this Friday at $19.40. So, guys, this merger is going to be taking place next week. We got a vote on Monday. We'll take a look at my options I'm entering. These options have not exploded that much, guys. Just know because I just entered the company, right around $13. So it's only $6 up, but I'm telling you guys, this is what it's all about. Getting in early on a company. And right here, we can see I purchased 7 contracts. We're up about 60% right now. Pretty solid, entering a merger. This could run to 30. They're expecting the analysts a 60% upside. So at $20 right now, this could potentially see $30. So we could be making some big money, a potential 200 plus gain, possibly 250% gain. So right here, these are worth about $5,000. I put about $3,000 in them. So this has a lot of potential leading up to this mergers, guys. Just know that this is what the analysts say about this company. And I'll show you guys. And once again, I just said this vehicle right here, this last mile delivery vehicle has just been announced just a day or two ago. If we look on Google, guys, this is going viral nationwide right now. This last mile delivery vehicle, they're competing it with names like Amazon, Workhorse. Look at the articles, guys. There's 3 articles right here a day ago. I mean, it just doesn't stop. Look at this. This is trending everywhere. CNBC, Autoblog, Yahoo, The Drive, Global Newswire, Car and Driver. This is insane, this vehicle that they're talking about. And we can just click right here, on the big one, the CNBC. The EV startup CANOO unveils new vehicle ahead of NASDAQ debut. Production of the vehicle is targeted to begin in 2022 and ramp up into 2023. This vehicle right here is the futuristic looking van, expects to be a targeted price around $33,000. People are going crazy about this price right here. And guys, I just want you to know, there's going to be a lot of volatility entering this stock merger next week. And just know it's better to get in than wait for a company to run, because yeah, this company could run to 30 and there could be a pullback, but there's no telling that the pullback is going to be under 20. So it's always better, if you want to get in a company, hop in and average down if there's pullbacks. That's the best thing I can tell you. Options right now, I'm not recommending options right now. I did recommend the options on my Patreon, about a couple weeks ago. So I wouldn't recommend options right now entering this merger, because, there's going to be crazy volatility. But if you do want to play options, you want to go long on this one. You want to go as far out as you possibly can, because they're going to be making money next year. They have a great subscription model. They got great price targets for their last mile delivery. This company has a lot of upside ahead of them, and I'm very excited. Guys, this company could potentially be massive right here. Enables new vehicle development in as little as 18 to 24 months at lower cost versus competitors by leveraging modular core skateboard technology. This truck, I heard, is going to be huge. This one is not released yet. The sport vehicle is going to be released down the road. So right now, this is going to be their money maker. And also, the last mile delivery vehicle is going to be announced, in just 2022 down the road. So there's a ton of upside. This company could be massive. Just know you're getting in at an early time frame. And even at that early time frame, they're saying that this company right now is undervalued. Roth Capital Partners initiated coverage of Hennessy Capital Acquisition Corp., CANOO Holdings with a $30 price target. The report, authored by Craig Irwin and Andrew Scott, highlighted the advantages of CANOO's skateboarding platform. This allows new vehicles top hats to be developed in just 12 to 18 months versus 4 to 5 years for traditional vehicles. Roth also noted that the company's zero commitment subscription model for the lifestyle vehicle, which is differentiated from rental or long-term leasing, should resonate with younger consumers. So guys, as we can see, this is another Roth Capital. They are recommending a buy rating for $30 as well. So there's multiple analysts coming out right now recommending this $30 price target for CANOO. They're saying their subscription model is very unique. This company has a ton of upside, and there's just no telling where they're going to be long term, but there is a little bit of upside getting your foot in the door right now, because there's just no telling what kind of run this company could go on. Guys, once again, my Patreon right now, we are doing amazing. We are in multiple options right now with multiple companies doing very well. We have over 965 users. I put out amazing call options with amazing cushion and time frame before expiration. I also listed some Neo call options. Everyone got in on these guys. These Neo call options right now, I'm up 600%. And there's also, like 500 other people that are in this exact same option with me, guys. We were placing these options on Neo at that $20 range. I only put in like $2,000. These already worth almost $12,000. And just know, getting in on Neo at $20, could change your life if you're able to time a company like that. And, we're in on CANOO a little bit early. We're also in on IPOB. So, guys, I just want you to know there's multiple companies out there. I'm going to be playing some more call options in the next 1 to 2 weeks. So be on the lookout for those. Just check out the summary. There's a lot of opportunity inside the Patreon for sure, as well as CANOO HCAC, in the short term. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. And only if you feel this video gave you a better insight on HCAC CANOO, be sure to subscribe to the channel. I'm going to be keeping you updated daily on all the growth stocks and spec plays. There's going to be a lot of great information coming out, and you don't want to miss it. This is Big Money Mindset. I'm Kyle. You have a great day.